Hi, and today is May 23, 2025, and the time is 7:32 p.m. Japan time. Today, Nikkei ended at 37160 yen. That's a 0.47% rise compared to the previous day. It's been a while since we've seen a rise, first time in 2 days, I think. The volatility index is at 24.48, which is a bit lower than yesterday, but still in the mid-20s, so I think we should stay cautious. The number of rising stocks also went above 2,000 today, which hasn't happened in a while, so in that case, Friday felt strong overall. That said, there wasn't much big movement. It feels like people being careful. Maybe it's being because the tariff conversation is coming up on the 13th, so there's some hesitation in the market. The Nikkei's PL is 15.35. EPS dropped a bit again today, and now it's 2420 yen. Overall, it feels like the numbers didn't change much, and Friday ended quietly. Um, now, I want to talk a bit about the candle pattern. I've been saying that the market might go back to the old range after the April drop, but in terms of the weekly chart, it did not return to the 37800 to 40000 yen range. It ended below that range with a bearish candle. So in that sense, it looks like this rebound is getting sold at the high. That's my honestly impression right now. With that in mind, I think it's better to stay cautious about Japanese stock for the time being. As for the bond market, things seems a bit calmer compared to yesterday, but the 13-year yield is still holding around 3%, so it's still something to watch. Even though it's Friday, the market looked relatively calm. And now about the U.S. market, the S&P is at 5842 points, which did not really change much. The volatility index, there is a 20.28, still holding in the 20s. Government bond yield still in the 5% range. So again, not much has changed. It feels like the market is stuck, like nothing is really moving. In times like this, I think people might get tired of watching the market. Maybe there's a feel like they don't need to check it anymore. Also, this month has fewer economic data release, so that could be one reason we are not seeing much volatility. So the focus might be on what kind of sudden event could happen. And by the way, U.S. rate cut expectation did not get much of a reaction either. Even when the news came out, and the market did not rebound that much. So I'm not really expecting big move there either. One thing that caught my attention was a warning from the ECB, and they mentioned a possible shortage of physical gold. Since gold price has been rising like this, demand for physical gold is probably going up too, and when demand rises, shortage become more likely. We saw similar thing during COVID and the Lehman shock. Future price fell, but physical gold demand rose. There was also time in February when some gold dealer in Korea stopped trading, so I think we should keep an eye on physical gold transactions, since they could give us hints about financial conditions. Also, I noticed a negative news item about spreading trading. It was swap spread trade. that's popular among the hedge funds. This trade is facing pressure now because long-term interest rates are rising. And this type of risk was actually pointed out by the IMF before. They said non-bank financial institutions were using huge amounts of money raised through lending and putting it into the trade like this. So this swap spread trade is exactly that kind of the trade. As long-term rates go up, it becomes harder to maintain these positions, and that could cause trouble. So I think we might even see surprise news about non-bank institutions, and that's something to be aware of. And it could become one of those sudden shocks that change market direction. US bond downgrade could be a part of this story too. And rising long-term yield may shake up the assumption behind these trades. A lot of money is concentrated in these swap trade positions, so if conditions change, these things could move fast. That's why I think it is important to monitor these risks and think carefully about how we take positions. And that's it for today. If you like this content, feel free to follow me, like buying along but quiet now. But maybe it's pay off big later. I'll see you tomorrow.